The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. Welcome to today's live trade event. I just want to make sure everybody can see my screen, and if you can hear me okay, if you can just type something in the chat box, that would be great. All right, perfect. Excellent. All right, looks like everything is in order. We are recording, and everyone can see my screen. And what I've got on here is a trade that I took today, and I'll get to that here in a second. Today's a little bit different. I've never done a live trade webinar before, and the reason is because I can't walk and chew gum at the same time generally. So when I'm trading, I don't want any distractions and whatnot. So we'll see how it goes today. Obviously, I think it's going to be tremendously valuable for you guys to see me go through the process, and it's just kind of a free type scenario here where I'm just going to let the natural flow of this kind of take over. It's not scripted. I don't know what trade I'm going to look at just yet. So, um, as we go through this, I will say that if this is your first video, if this is your first introduction into Option Insanity, do not take these trades yet. You really need to go through some of the videos. You really need to go through some of the reports that are available, read through those. There's a lot of good information in those. And so there's plenty of time. You don't need to rush into this. There are mistakes that you can make. There are things that I mention. If you're taking your own trades, there are things I mentioned in the reports and in the videos that if you don't know about these things, you haven't gone through them, that you'll make mistakes and you won't have the outcome that you were hoping you would have. So take it slow. Again, if this is your first introduction into it, do not take the trades. All right. So having said that, the Option Insanity, just to give you a very brief overview of what it is just basically where I am looking to sell further away expiration options and hedge those by buying closer expiration options. And the key is the PPD. And sometimes, on occasion, there's a reversal in the PPD. And of course, again, if you haven't heard about the PPD or know about the PPD, go to the resources in PDS Trader and watch that video. It's very, very crucial element to every option strategy that I trade. But nonetheless, there are times when the further away expiration PPD is actually greater over the next 2 days than the closer expiration option PPD. And so you can use a combination where you want to sell the higher PPD and buy the lower PPD, and that's not absolute. You obviously need to take a look at the risk if the market moves, and that's the other key component is you have time decay with these options, and then you also have market movement, and you have to take into consideration both of these things whenever you are looking at a trade or a strategy. And so the reason that sometimes these things exist is because of the new format within weekly options, the relatively new format being in specifically in SPY. This does not exist in individual stocks. It is something that only exists right now in SPY, and that is the Monday, Wednesday, Friday option expiration. And so what happens is if you get close enough to the short expiration or the next expiration, so for example, we're going to be looking at Monday, Wednesday expiration trades today. And the closer you get to the Monday expiration, the less time value there is on those options. And sometimes that time value is so cheap that it is better off to sell the next expiration, so to sell the Wednesday expiration. And so we'll take a look at a couple of these as we start to analyze why that exists. And so that's all we're doing, is we're looking to sell the more expensive PPD options that happen to be expiring at a later date than the ones that we're going to look to buy. And you can't get this on a Friday to Friday option expiration. It basically doesn't exist. And you can't get this in, obviously, monthly options ever, nor could you have ever gotten it on monthly options. So this is a brand new concept. It's a brand new thing. That's why you're not going to see it generally out there. And the other reasons you're not going to see it out there is that you really have to know what to look for. If you don't know what to look for, you don't know kind of where to look, you're not going to just stumble across this stuff. And so being brand new, being the sheer number of opportunities that, or the sheer number of combinations, I should say, that exist within options. You have single point strikes. Tomorrow there'll be, Monday we'll actually add 50 point strikes. And so the sheer number of combinations, it will take you forever. And that's one of the reasons why when somebody gets involved with Option Insanity, they also get a copy of PDS Trader, because I could not trade this, at least not efficiently, without PDS Trader. Of course, I know what to look for, but it would take me forever to find the best scenario without PDS Trader. And as you'll see here as we get going with this, there are, I have about 20 to 30 windows of PDS Trader open at any given time. I'll try not to be too confusing with all the windows, but I cannot imagine, as an option trader, I cannot imagine trading without PDS Trader. It is absolutely by far the best option prep tool out there. You'll see that demonstrated as we go through this as well. And then I'm also going to show you. So what I'm going to do is I'm going to open a PDS Trader, and if you are a member, of course, everybody on this call is a member of Option Insanity. When you open PDS Trader, you go down to System Strategies, and you'll see that there are 5. I added one. There are now 5 Option Insanity strategy finders, trade finders, that you can access. And so, basically what I do is I open those up and I look at the opportunities. I scroll through those opportunities. I find one that might be a candidate, and I throw it into a graph, and then I start to play with it a little bit. It doesn't take very long. And you can do this at the end of every day. You can do it, right. I like to do it right when the market opens, maybe about half an hour to an hour with the market open. If you can't do that, you can do it, at night before the market opens. And then again, before the close. And so it's just a quick scan, a couple of times a day is what I like to do. And if you can't do that, obviously, again, you can do that at night and just kind of try and prepare. So I'm going to go through that process, and then I'm going to take the trade, or I'm going to at least place the order through Trade Partner, so you can see how I do that in Trade Partner. And one of the great things about Trade Partner, again, the best tool, the best execution tool out there. And I say that because I had these built because of my need as a very active trader. And so Trade Partner being the best execution tool out there for this type of approach, and several of my other approaches. And quite frankly, if you can't watch the market, it's a tremendous tool. If you can't be there at the close to get out of trades, you can set up Trade Partner to do that for you, et cetera, et cetera. All right, so that's what we're going to cover today. I will, of course, answer any questions once we get through here. And I'm just going to, part of the problem with not having a scripted webinar like this, a free-for-all type live trade webinar, is that I can ramble. I mean, you get me talking about trading stuff, and obviously I can talk on any subject matter for many hours. So I will try to not get off on too many rabbit trails as we begin. So I'm going to start with the trade that I took this morning, and I didn't. This wasn't a tremendous trade. It wasn't a knock your socks off trade. And in fact, the Monday Wednesday expiration combination is best when taken on Friday morning or sometime during the day Friday. And depending on where the market is, if the market makes a move from Friday morning to Friday afternoon, you can have two different opportunities that are actually taken. So the reason for that is because by the time you get to Friday, that Monday option expiration is becoming cheaper and cheaper and cheaper. And in fact, by the end of the close on Friday, it's super cheap. So you can buy the Monday, sell the Wednesday, and you have a pretty solid opportunity. Now, with this one, because it was Thursday morning, there weren't any knock your socks off opportunities, and there very well may not be any knock your socks off opportunities right now. Again, I haven't looked yet, so I'm doing this, from scratch with you guys, so you can see my thought process. And I'm just going to talk and talk through it. So I opened up PDS Trader, and I found this particular opportunity, and I liked it for a couple of reasons. Number one, SPY has been on a move to the upside recently, and I always like selling calls into the upside move because that's when the volatility is the greatest in these options, and they immediately drop back as soon as the market drops back. So does the volatility in these calls with regard to SPY anyway. And so I liked this for that reason. And the risk to the upside again is at 297. That's the maximum risk level, is if the market gets at 297. And let me scroll this up so you can see exactly what this is. All right, so everybody should see what those legs are. Want to make sure that that is the case. All right, perfect. So basically, I bought a 291 call, I bought a 297 call, and I sold two 293 calls. And I did that knowing that if the market were to move down, I should be able to grab a profit on this. I don't have to wait till Monday. And if the market moves up, then I have some risk here at the 297 level and above. It gets smaller as it's moving up. And matter of fact, the risk is at 60. It is at 62 cents or $62 if the market were to skyrocket by Monday and I did nothing else with the trade. And so this is the beginning of a trade, and it's just a 1-1-2. And in order to place this trade on, I have to buy a different option. Okay, I have to buy. I can't just place on this 2-1-1 trade. And the reason I can't place this 2-1-1 trade on is because they'll ding me for full margin, and I don't want that to happen. And so what I do is, again, I'll go through. You'll see how I do this in Trade Partner, but I will buy a deep out of the money call that expires on 8/28, which is when my short expires. And I have to buy two of them, and I buy two of them because I'm going to be short two of the 293 calls. Now, if I wanted to, and I actually did, I'll show you that here in a second. I could put that fourth leg in this trade, but I don't like doing that. I like buying those individually and then putting in my my option insanity trade. And the reason is because, and you'll see this, sometimes you don't get filled on these four legs, especially when there is 2 or 3 lots on each of the legs or on a couple of legs. So you have this odd trade size on each of the legs, plus you have 4 lots, and it's just more difficult to get filled at your price. And so I like to buy the I call it my margin hedge trade first, and I generally pay 2 or 3 cents. Since I'm not out trading my margin, I can't out trade my margin because my account size is a bit bigger. I don't mind going further out and buying these things for 1 cent. But if you want to lower the margin, the closer to the money that you can buy those, the better off they'll be. All right, so what happened here is I placed this trade in. I was filled at 138. The trade finder actually showed it as a credit of 130. Market was moving up a little bit. I was filled at 138. I saw it go as high as I believe 147. And if the market would have continued moving up, that would have been a little bit higher priced spread or bigger credit, smaller risk. So the further it moved up, I could have cost averaged if I wanted to. That was not the plan. But what happened is that the market came down, and I was filled at 138. The market came down. I had a target of $50. And why did I have a target of $50? Because my max gain on this trade is only $138, and that's by Monday. And an hour, it took only an hour for that thing to get filled. So I went from 138, it went from a credit of 138 to 88, and I took my profit, and that was that. And so at $50, that's almost half the max. And for me to actually get to the max profit, the market would have to drop down to around 288, 287, maybe 286-ish area here in this area down here, and that's when I would get my $138. Well, that's not very high probability, and I was going. This was more for a high probability scenario trade for me, and so as it turns out, market moved down. I was able to take the profit $50 and move on. So where did this trade come from? Where did it start with, et cetera, et cetera? Well, here's what it started with. This was actually a 2-3. 2-1-3 is what came on the board when I searched in the trade finder and scrolled through all the different graphs and found this trade. This is what it looked like at a 50-cent credit. And obviously, with this particular trade, I'm not a huge fan of it. And the reason I'm not a huge fan of it is a couple of reasons. Number one, I like my risk to be less than $75 on these trades. Worst case scenario. If I can't get a risk of less than $75, I generally am not going to take the trade, or I'm going to place it at a credit limit that will give me drop my risk to $75 or less. And so this is showing at a 53 credit. And if the market were to move down and I was able to get this for a 78 credit, then it's closer to a $75 risk at the peak risk level, which is 291. Okay, that's where the peak risk is, and it's showing $114. The second reason I don't like this trade, the way it is with the 2-3, is because if the market moves down, and I've said this many times, so forgive me if this is like the 150,000th time that you've heard this from me. As SPY moves down, volatility in the call options is more stubborn. It will increase. And so my actual risk here is not $114. It's actually more than that. And as the market moves down and the volatility in the call options increase, then it's taking away my the profit mechanism, which is a faster PPD or a larger PPD in the short options. And as the market moves down, that begins to reverse itself. And so for that reason, I didn't really like this trade, but I wanted to see if it was a good starting point. And so what I do is I throw it into a portfolio graph, and I immediately drop it down. And this is the first step that I do. I immediately drop it down to the smallest denominator, if you will. And I will go a 112, and I will say, okay, is a 112 trade one that I would consider taking? And the answer is yes. It is, A, because there's a high probability of success on the short term. B, the risk is limited, and it's actually probably less than $100 up here at 190 at 297. And the reason is because as the market moves up, volatility tends to flee from the call options, especially the closer we get to all-time highs. And we are very close to all-time highs, even though we are off of those highs. We are very close to them still. And the closer we get, the more volatility that comes off these call options. And so my risk at that point is probably much less than $100. And I also like this particular trade because I'm very bullish in some other positions that I have. And so sometimes I'll use option insanity as a means to hedge my overall portfolio, which might be quite bullish. And so I'm willing to take that risk in this particular situation because of that. But what I don't want to do is I generally don't want to take a risk that is less than $75. I went ahead and placed this trade just for the example today. Obviously having no clue what was going to happen, and so I placed this trade this morning, and obviously you also know what happened. Now, what did I do with the 2-3? And the reason I'm going through this is because I did have, as I mentioned, the 2-3. I don't take this trade normally, but I did for your sake today, again, so that you could kind of see how it works and what happens. And I placed this trade in at a 53-cent credit. And it was not filled, even though my 112, these are actual fills, by the way. So my 291 long is at 348, my 297 long is at 40, and my short three, my 293 shorts are short from 263. So those are actual fills. However, a 2-1-3 ratio was not filled at 53 cents. And so what I did was I was willing to go all the way down to 45 cents. And so I set it up on Trade Partner as a smart fill scenario. And I also included my long leg in there. And so I set it up and started at 53 cents. I let it sit for a minute, and then I changed it to 52 cents, or Trade Partner changed it to 52 cents, and then 51 cents, and then so forth and so forth, down to a limit of 45 cents. That was my bottom dollar. I was not going to take the trade if I couldn't get 45 cents. And it sat there for 45 cents, even though the midpoint bid ask was trading at 48 cents at the time. And again, this was a four-legged trade because I had my hedge option in this particular order. And so finally, along about 3 hours later, after it had been sitting there, it was filled at 45 cents. Okay. And so I placed that trade in there just for this group to, if the market moves down, you'll have a live example of what I'm talking about if I end up taking $100 loss or more on this trade. And so we'll just I'll visit this in like a report or something, and we can go from there. Okay, so that kind of covers a brief. That covers a lot of different things that I'll mention again as we start this process brand new, starting right now. So what do I do when I'm looking for a trade? All right, so as I mentioned, I have a lot of different windows open here, and so I'm going to start with this one. And I'm going to do a refresh, hoping that we don't have any issue with a refresh to get the latest prices. And so this is one of the strategies. When you open up PDS Trader, you scroll down to system strategies. You can see option insanity 1-1 ratio inside. I cover this in the first video in how to find those and look at these opportunities. But the specific combination that I'm looking at is 826 versus 828. I want to sell the 828 and I want to buy the 826. And so I'm going to click on 826. Okay, so it's always the one on the day that I'm going to get out. And I'm always going to get out when I have to get out of my longs. And so here's the first set of opportunities. Now, there are only 12 opportunities listed here, as you can see here. And part of the reason is because they don't have half strikes on the board yet. They will bring half strikes on the board tomorrow, or at least they should. And so tomorrow, what's going to happen is you're going to see the number of opportunities balloon, and there will be many more to look at. And so what I do is I click on compare risk graphs. So I click on 826 and then I click on compare risk graphs. And the first thing that you're going to notice here is that there are not a lot of opportunities just because of the combination. All right, like I said, this is something that'd be very difficult to trade without PDS Trader or something that finds the trades. And so what I do is I just scroll through here, and if I see something that interests me, then I'll take a look at it and I may consider it. And it'll throw in 9 risk graphs, and then it'll say click on more. Of course, there are only 12 opportunities. Okay, now most of these opportunities, especially when you're looking at them early, and we're looking at it kind of early, most of these opportunities are going to be crapshoots. I wouldn't take them. You couldn't pay me to take them. They're no good. So what constitutes one that I would consider? Well, let's take the best one on the board here, which is probably the best looking one on the board is probably this one right here, which is, hopefully you can see my mouse moving on that one. I know there's a lag. Nonetheless, it's the one with like a little W shape there. And that one is the best looking one on the board. I would not take this one. And the reason I would not take this one is because what you have here is you have a very low probability of realizing a gain. And the reason is because the profit levels actually don't start until about 290 and then again at about 294.5. And so you have a large range there where you don't start to make money. Even though the maximum risk here is only showing at $50, it's probably going to be something more than that to the downside. To the upside, it's probably going to be something less than $50. Again, because you have that volatility issue with the market moving down versus the market moving up in SPY. And so, the risk-wise, that's great, and it only occurs at 2 points. The first one is at 291, and then the second one is at 295. Those are the 2 points that those begin, or excuse me, 293. Those are where those maximum risk levels are. Above and below those, it's smaller. Okay, but the wide area is no good. And so to get a better look at that, I can click on view initial risk graph, and it will bring up a bigger look at that, maybe. Hopefully my internet is okay. Well, we'll come back to that. That's the problem with doing live, is sometimes it's a little slow. All right, so there was nothing there that I would consider taking. Long story short. Okay, so here is an option insanity 1-1 ratio outside. And again, this is another one. I'm probably going to change this one a bit because I have yet to take Actually, that's not true. I think I took one or two of these. Um, but these don't produce a lot of opportunities, especially on the 826 levels. And so again, the reason for the different strategies is because if I put too many variables in the same strategy, it will break. And it just doesn't know what to do with all those combinations. And so in order to keep the search time lower, to kind of break up the trades a little bit, I have different strategies, which are just simply different combinations of strikes and expiration dates. So you can see a wide variety of how this stuff works. Okay, now on all of these, the risk is just too high. That's the bottom line. And you can see it there, it approaches $200 on a lot of these. And so that will get better tomorrow, but still for Monday, Wednesday, this is not one of the better strategies to take. All right. Now here's that risk graph. It came up while we were looking at those other opportunities. And again, you can see here at 291, that's where the maximum risk is being projected. That's actually going to be more than $43. And then at 295, that's projecting at $45. That'll actually be less than $45, most likely. And then this is probably pretty accurate, might be a little bit less than this. And so I'm not going to make money between 290 and 296. Actually, I'm not going to make money. That's a very low probability trade, even if the risk is really small. Now, if the market were to make a move down, great. I have a $68 potential win to both the upside and the downside. But again, this one is long term. This is not an insane option opportunity by any long stretch of the imagination. So I wouldn't take it. All right, there's nothing in the outside. Let's take a look at the 2-1 ratio hedged and see if there's anything in the 2-1 ratio hedged. And again, we have a little bit different structure with this particular strategy and the different strike prices and the differences between those. And you can start to see here where I found my trade that I took this morning is 2-1, 2-1-1, and all of these are 2-1-1s, every one of these. All right, and this is a pretty close rendition. As a matter of fact, this is the exact trade that I took this morning. It's now trading at a 35 credit. Nope, I'm sorry, that is not the one that I took this morning. We'll take a look at that one anyway. This one, obviously, the risk is to the downside. The max risk is $100. The risk to the upside, there is risk to the downside. It's very small. Again, I'm taking a look at, hopefully you can see my mouse moving on that one. And then I'll scroll down here. We have another W-shaped option. And by the way, the W-shaped options, those are simply where the longs and the shorts strike differences are equidistant from one another. That's what creates that W shape. And you can see here, so I have a 291 long and a 295 long, and that's split in the middle by two shorts at 293. That's the W one. Okay, and this one is a little bit better than the one that we just looked at, but still not one that I would take. Okay. Let's scroll down here and see if there's anything. And there were only, I believe, there were only 12 opportunities on that one, so there was nothing really there that I would take either. Then we're going to go with the option Insanity 3-2 ratio, and I will take a look at those. And here with the 3-2, we have a little bit different structure again, and none of these, again, unless I see one where the risk is less than $100 and has a high probability of making something, I'm generally not going to take it. And most of these are just eh. And part of that is because there's a special timing that's involved. If I would have been thinking a little bit straighter when I set this call, I probably should have had it for tomorrow morning, because there'll be many more opportunities for tomorrow morning. All right, and so there's nothing there that I would take. And then in the 3-2-1 option insanity 3-2-1, that I added that. It's the 5th strategy on there, and I'm actually probably going to add 2 more. But let's take a look at those. And again, overall, nothing absolutely insanely, ridiculously great that I can see. But I'm going to play with one anyway, just to go through the process. Okay. All right. So, scrolling through here, I'm going to look at even though I would not take this, I'm going to look at that one. And don't worry, we will find one that I will take here in a bit. All right, so this one is a bullish leaning option insanity trade, only it's not insane. It's not all that bad, but it's the high probability movement area is within the closest to where the market is at. And there's something that I call equal market movement ratio. If you've heard of that, equal movement ratio. If the market moves up 1 point, how much do I make versus how much do I lose if the market moves down 1 point? And if it's negative, in other words, if I would net, if I took 100 trades, 50 of them it moved up a point, 50 of them it moved down a point, and I would net a loss, that gives me a negative equal movement ratio. All right, so if you take 2 and divide the profit and the loss, add them up and divide it by 2, and it's negative, then you have a negative probability within that 1 point range to the upside and to the downside. So that's the first issue that I have with this, is I always look at, okay, what is my EMR, my equal movement ratio, based on a 1 point move up to the upside and to the downside. And that will often keep me out of a lot of trades that might look like, oh yeah, that looks pretty good. But in reality, it's really not. And then I'll do that same thing for a 2 point. All right, so what if the market moves up 2 points? What if it moves down 2 points? That gives me a positive EMR. The 2 point EMR is positive on this particular trade, but not by much. And then if I do a 3 point, it's positive, and then a 4 point, it's positive. So everything outside of that, it's positive, but the high probability is within 1 to 2 points. And so that's a break-even trade long term for the most part. Okay, so I wouldn't take that for that reason. And again, my risk here is showing at much greater than $75. But let's say that I do this, and this is the one complaint that I have about PDS Trader, and it might get fixed in the future, it might not, or it might get added in the future, it might not. We'll see. Is that I would like to, if I open up a graph like this, I would like to immediately be able to alter the trade size, maybe add a leg, et cetera, right from this graph, as opposed to having to open up another portfolio graph and starting from there. So yes, it is a complaint of mine. So let's start with that process. I'm going to go to portfolio. I'm going to open up PDS Trader, and I'm going to go to portfolios, and it's going to allow me to, I think this is slower because I'm doing a live video. Usually it's really, really quick. So I'm just going to do this live video portfolio SPY. Let's do option insanity. All right, and then I'll click on create the portfolio. So I'm just giving it a title, and it'll ask me, okay, what option chain do you want to view? And I'm going to say SPY, and then it will start collecting and gathering all of the SPY data. And so right now it's showing a SPY at about 292.23, so it's come off a bit from when we started. And then it gives me, obviously the option chain for SPY. And so what I'm going to do is I'm going to go ahead and just click on that to not view the 823 options, because I'm going to be dealing with 826, 828. Okay. And so I'm going to go back to my trade and I'm going to say, okay, I'm going to be buying a 291 call and buying a 296 call. And let's see here. I'm going to buy 291 and then I'm going to buy a 296. I'm going to add it to the same graph that I just started. And then I'm going to sell the 293 calls that are 828. So I'll scroll up here. And again, I apologize if there's a delay. So I'll slow it down here in just a second. All right, so I'm going to sell the 298 and I'm going to add it to that same graph. All right, so now I have the 111 in there. And if I go back to that, you'll see that it's actually long 2 and short 3. So long 2 of the 291s and short 3. Did I say, why did I do a 298? I put the wrong short in there. So I said a 293 and I did a 298. I don't know why I did that. So I'm going to do that. And then I'm going to go 3. All right, so there is that trade. And it was trading at an 18-cent credit, and it is now basically trading at a 37-cent credit. So that's one benefit is the credit has increased. A bigger credit, the better the trade is. And so the first thing I do when I see something like this, so let's say that risk graph was definitely one that I would take. What I would do is I would immediately go and bring it down again. So this is the second time you've seen this process. I'll go, okay, what does the 112 look like? And you know what? The 112 looks great, actually. The risk is at $50. It's only at 296. There is risk to the downside, even though this says the minimum is 12. But again, my complaint with the option calculate the math calculation algorithms that they use to project the prices of options sucks for SPY, and especially for SPY weekly options. It does not take into account the principle by which I keep repeating myself with is if the market moves down, volatility will not come out as fast as it is coming out if the market stays the same or moves up. But the calculations from all of the math out there, all the different algorithms that are used, do not take that into consideration because most of them have to be applied across the board to individual stocks. And so there is no special one for SPY, and there needs to be a special one for SPY or any stock index market. You see the same thing with IWM, you see the same thing with QQQ. And certainly, obviously, you see it with SPY. So my risk, there is actually risk at 291 is basically what I'm trying to say. All right. Now this is showing at a $1.05 credit. So this is pretty good in that my EMR is positive no matter what. So no matter no matter how far away I go, no matter how close it is, my EMR is better than 1-to-1. It's positive, in other words. And the maximum risk is only $50. It's probably a little less than $50, and it only occurs at 296, which is 4 points away from where the market is, and that and it has to reach there by Monday if I don't do anything else with this trade. So I would take this trade. If this were the only one on the board, I would absolutely take this trade. And I would probably look to do something to increase my profit potential at the 291 level, because there is a little bit of risk there. If the market were to drop down to 291 by Monday, I might not make quite as much as I would like. Now, there's one way to take a look at this and kind of override the problems with the algorithms that are out there for calculating the projection of these option prices. And I specifically had this put into PDS Trader because I was tired of not knowing really what to expect or being able to stress test. So I have a stress test over here. You can ignore that. The better one is to look at the short call. Now, the short call is where the profit potential is. And the short call is needs to drop in value. Short call needs to drop in value. The more it drops, the better the trade is going to be. The less it drops, the worse the trade is going to be. And so the lower the volatility number, the more it's going to drop in value. The higher the volatility number, the greater it's going to drop in value. And so what I'll do is I'll come in here and I will change the volatility number to stress it. And so instead of 0.14, I'm going to go 0.18. That's not it. It'll recalculate. Now I have a completely different scenario. And again, this is not a perfect way to do this because it's not accurate if the market moves up. If the market moves up, then the loss is probably less than $50. All right, but if the market moves down, instead of making 12 bucks, if the volatility really increases significantly, and it's probably not going to increase that much, but it's always good to test it out, I could be losing $50 on this trade at that point. Okay, so that kind of gives you an idea of like a worst case scenario type situation to the downside. Now to the upside, again, the original volatility projection, or the way it currently is, the current volatility is, if it remains at this level through Monday, through the close Monday, then this would be a pretty accurate projection. But if it moves up, I actually will move it to about 113, and then you can see here that my risk to the upside is only calculated about $37. That's probably pretty accurate. Obviously, again, the issue with this is that you need to move it up, and that to move the volatility number up is a more accurate representation if the market moves down, but it's not a more accurate representation if the market moves up, and vice versa. So there is no perfect solution on that. I'm just giving you what is and the process that I go through, okay? So again, that's at 105. Now, if I'm not happy with this, or if I'm almost happy with this, then I may not put this in at 105. I may say, okay, you know what, I'm going to get in at 110. I'll just put an order in to get in at 110 or 115 or whatnot, all right? So let's start with the process of placing an order through Trade Partner. And I'm going to go over here. Where's my Trade Partner? There it is. So here's Trade Partner. I've got it open on the Smart Orders tab, and I'm going to click on a new system. Okay, and I can take this and I can, let's see here, I can give it a title, and we're getting close to the market close, so I need to get moving on this. So I'm going to go Option Insanity Live Trade 8-22-19, and I'm just going to save that just so for future reference, if I ever want to go back and look at the trade that I took or the order that I placed, et cetera, et cetera. And then it automatically fills in SPY because that's what I trade the most. And so guess what? It's slanted towards what I do. So the market right now is at 292.76. One thing about Trade Partner, when it brings up an option chain, you're going to see some space. It's going to chart the options. And what you're going to see is as we draw closer to expiration, these will get closer and closer together. So the 823 and 826 should be, they actually should be a little bit closer than they are, but nonetheless, that's just something I talk about that in a video, so I'm not going to take the time to go through it right now, or in one of the videos, I should say. Again, it's showing the option chains, and so I'm going to click on that one to not view the 826. I'm going to focus on 823. So I'm going to focus on 826 and 828, and what's my trade again? It's long, the 291 and the 296. 291 and the 296. Whoops. So I'm going to go buy and then buy and then short the 828 293s, and I'm going to go sell. And that's going to be the trade. I'm going to sell 3 of the 293s, and I'm going to buy 2 of the 291s. And did I do that right? It's showing, oh no, I didn't do that right. It's a 112, sorry. All right, so the current price right now for this is 99 cents, and that's because, or $1, and you can see that in the mid price, and that's because the market is trading higher than it was at the time. And so if the market moves down, you'll actually see that increase a bit, and you might actually see it increase a bit if the market moves up as well. All right, so that's the trade. Now there is one issue, and that is that I have to be long some other options in order to take this trade. And so I have to go here, and there are a couple of different ways to do that. So I'm going to show 40 strikes so I can go way out of the money, and I have to buy an 828, or I have to buy a couple of 828s. And you can see here the 303s are going for 2, the 302s are going for 3, 4. I can probably get 3 for them, so I'll just buy the 303 and add that to the order. Okay, so I can, if I have a 3-legged order, an option insanity trade that's a 3-legged order, I can do that. I can add the extra buy leg, but again, sometimes you don't get filled on that. And so nonetheless, I'm going to go ahead and place this order. So I'm going to say execute order 1, and I'm going to go add a credit, and I'm going to say 105. All right, and it's a day order because I'll probably readjust it tomorrow if it's not filled, and then that's that. I can place this order. I save my system. In fact, I will go ahead and place this, and I actually got to put it in a different account, so I'll put it in that account and save it again. Okay, and then I'll turn it on. Okay, so once that system is on, it's now, whoops, error in saving the system. What did I do wrong? I did something wrong. Oh, I changed it. So let's do this. Save, and then turn on. All right, so that order is now working. And what will happen is when that order is filled, and you can tell it's working by the nice green border, it will not let me change anything while it's on. The order is pending. If it's filled, it will show as filled, and it'll give me the price that it's filled at. All right, that's how that's one way to do it. As I mentioned earlier, I like doing it a different way, and you can see here in the list, option insanity live trade 822. It is running, but one of the ways that I actually like doing it, and if you have a 4-legged option insanity trade, you're going to want to do this. You're going to want to do it this way. Option insanity live trade 2. Let's just do that one. So the first thing I would do in, if I have a four-legged trade, for example, and I do this anyway, is I go ahead and I put an order in to buy the 303. Or actually, let's do the 302. Okay. So I'm going to say execute order 1 at a limit of 0.02, and I'm going to do 2. And then I'm going to do this. Then I'm going to put in this original trade. Okay. So whoops. I want to add order. And so I'm going to go buy a 291, then buy a 296, and then sell 2 of the 293s. All right. And then it's a 112, so I do that. And then I'm going to add an action group. And I'm going to say, now this is the cool thing about Trade Partner. I don't want to place this order, nor can I place this order unless I'm long my 302s, right? Which is order 1 up here. So I'm going to say if order 1 is filled. So I just click on if order filled button and it will say if order 1 is filled, then execute order 2. And that's how it works. It's really stinking cool. And I'm going to say add a credit, and I'm going to say 105, and then that will be that. Okay, so again, I got to change the account that I'm going to do that in. I'm going to save the system. It is now saved, and I will turn it on as well. So now I've got this order working in twice. What? This has never happened before. Of course, it's going to happen when it's live. So I don't know why that is the issue. Okay, then I'm going to turn it on. Are you sure you want to turn it on? Because it will go, what? I told you this is why I don't like doing live stuff. I never have seen this ever in the let's see, test name 1. So I know they just pushed another version today, so that might be the case. There. All right. So it's pending. The first order is pending. Now what's going to happen is the second order is not going to actually be placed until the first order is filled, and it will come up with a fill. And of course, it's even though it's trading at 2, the bid ask is at 3. It's going to be, might be a little difficult. I really want to get one that fills. So let's do this. I'm going to turn this off. And I'm going to say, I'm going to increase that. Whoops. All right, now one thing about Trade Partner that you're going to need to know is that if you turn a system off, it keeps the orders that are working in place. And so I've already got the 302 working, and we're going back and forth on how to deal with that, on whether to give you the ability to cancel any existing orders if you turn it off. That's probably what we're going to do, but haven't done it yet. Nonetheless, so I've changed that to 3, and it should fill, and it's going to come in. Basically, it says you've already started the system once, you stopped it, but the orders are still remaining in, and that's fine because it's just a 302. So for time's sake, I'm not going to mess with that. All right, so I increased it to 3 on order 1, and it should come back and show as filled fairly quickly so that you can see how this works. And the market must be moving up. Nope, it's moving down because the credit on that is decreasing. All right, so let me take a look at something here. Okay. All right, so let's take a look at that again. Well, I guess it wasn't filled yet. So it should have been. Well, we'll come back to that. All right, so I've got those orders working. They are in place. One where the limit is has the extra leg, and one where I bought the extra leg first, and then once that is filled, it will then, or the first order, and then it'll place my option insanity order at the price. All right, so let's go back now. We've got that out of the way, and let's go back and start playing with this a little more. Again, one of the things that I do is when I get a trade that I'll consider, I start looking at the different variations of the trade. And so the first, that ding told me that it was filled. So sure enough, I don't know if y'all heard that ding, but I heard the ding. It's a little alarm that Trade Partners tells you when you are filled on a trade. So filled at 0.03. Now my second order is placed but not filled, and it's not going to be filled, unfortunately, because the market moved away from it. We've got at 105, and I'm not willing to take it at 89 for the reasons that I already talked about. So going back to this, I look at 2 and then 3. And so here, sometimes you got to redo that. This is it goes from, when I do this, it goes from being a bearish leaning trade to a bullish leaning trade, just simply by changing the trade size. Or if I want to go, again, more bearish, then I add the number of shorts that I have. Now on this one, I have more shorts than I have longs. And you can see that that's shows the case because there's unlimited loss potential. Again, can't take this trade unless I have an extra long somewhere in here. But sometimes what I'll do is I'll create these other trades, which this, by the way, is if I were to go 2, if I were to add 2 on the 296, it would just be a 112, right? So doing this, I can add a hedge somewhere and maybe lower my loss potential. So for example, 297.5, my loss is 137 bucks. Again, if I want neutral to bearish, what I can do is I can go over here and I can say, okay, you know what, add me a hedge. And see what it looks like. And I'm going to go because that's not accurate. So now I've got a hedge and I push my risk to the upside. I just start playing with it, and let me save that so it'll change. All right, so that gives me a much bigger trade neutral wise, a much bigger trade to the downside if the market moves down. My risk is still at around 100 bucks to the upside, and if it really moves up, it's actually at $59 based on that. So I can take that trade. Again, that's not an insane trade, but it's better than a lot out there for certain. So So I'll do this. So now we have a 314 and no hedge. And this is, it doesn't take this long. It's obviously taking longer because, again, we're doing this live. But I just want to go through the process of what I do. And this is a significantly bullish trade. Again, the maximum risk to the downside is only $31. If it tanks, a small move down though, and you're looking at $200 risk. And the reason is because I've got 4 shorts here and 4 longs as opposed to a 112. So that's almost always going to be the case when you add trade size. You're going to add risk as a general rule if there is risk. So we can go a 325 just to complete it out here. That's not complete. Okay, so there's a 325. Much bigger profit potential to the downside at $142. My risk is not bad. At $89, again, that's going to be much bigger than $89 if the market moves to that level. And the reason it's going to be bigger is because the volatility is not going to be accurate. And there is a trap that a lot of traders fall into. And you have to be very careful of this. And this is why the first thing I do is I go to a 112. I go to the smallest trade size possible and see what the graph is. And if it's acceptable, I'll stick with that as a general rule. If I can dramatically improve the graph with the trade size changes, then I'll do that. But it has to be dramatic. And this is not dramatic. And in fact, what has happened here is I've created a scenario that's not good. And the reason for the risk at this level, and the reason is because I have 5 shorts. And the one thing that you have to understand is that, and so many traders make this mistake, is that the larger number of trade size that you have in putting this single trade together, the more margin for error there is. So if the option projection is off by 10 cents per short, that's 50-cent difference. Okay, it goes from an $89 loss to a $139 loss with just a 10-cent difference being wrong in its projection in the value of that short at the time of expiration if the market goes to 291. Okay, a 20-cent error or difference is $1. And so all of a sudden you go from 89 risk to possibly $189 risk. And it's all because of the larger trade size. And so again, if I were to change that volatility number to 18, what's my risk to the downside? It's showing it almost at just over $200. Again, to the upside, that's not accurate. It's only accurate to the downside if volatility remains dramatically in the short leg at the time of the long expiration. And so, this is not a trade I would take because it's not worth it. And you're better off doing a 112 than you are a 325 in this scenario. All right, so that's one of the major differences in that. Okay. All right, so there's the 112 again. That gives me the idea of if the market moves down and volatility remains strongly in the short option, then I actually might be risking $50. If it moves up, that is not an accurate risk because the volatility will not remain in those shorts the way it does to the other side. All right. So I was hoping we would find something a little better today than what we did, and maybe even get filled. I think I I think I am going to do another one of these for you guys. I think hopefully you found it valuable. You'll be able to watch the recording. If I went a little fast in some areas, obviously we're over an hour into it, so I needed to move along fairly quickly because I knew there was going to be a lot that we cover. But I'm going to go ahead and take questions on this. Alrighty. So the first question, why will there be better opportunities tomorrow? The reason that there will be better opportunities tomorrow in the morning and in the afternoon is because the value of the 826 longs will have dramatically decreased. And so I'll actually be paying even less in PPD for my long side versus how much the shorts will drop tomorrow. That and they're going to throw 50-cent strikes on the board. They do this on Friday. I don't know why they wait till Friday to throw 50-cent strikes on the board for Monday options, and that will dramatically also increase the number of opportunities that you can see. And that should help much. Okay, so I'll actually do a video tomorrow. I won't do another live thing tomorrow, but I'll do a video tomorrow and post that as well in conjunction of this one. And then the next time that we do a live video, I'll do it on a Friday morning. Let's see here. Oh wow, there are a lot of questions. A lot of these I've answered, so I'm just scrolling through here. I think it's here. Trade alerts. Do I provide trade alerts on Trade Partner for Option Insanity? A lot of you know that I provide trade alerts for various different approaches in Trade Partner. Right now, that is not the case with Option Insanity yet. I will be doing that starting in October, and I will limit it to the Monday, Friday, or excuse me, the Monday, Wednesday, and everyone will get a month trial of that at no cost. And basically, what you saw me do with that trade today, I'll actually do a better trade. I won't put any of those types of trades through. Those did not meet my criteria quite yet. But when I do post a trade like that, what I can do is I can send it to all subscribers, Option Insanity members, and it will appear in your Trade Partner. And all you have to do is click on it and then turn it on if you want to take it. Eventually, you'll be able to say, yeah, take all trades that come in on the subscription automatically, and you don't have to do anything, but we're not going to do that yet because that one has to be super, super duper tested before we can release that to make sure that it works. So there are no trade alerts on Option Insanity yet, nor all I provide in Option Insanity right now are the weekly reports and an occasion bonus like this video or a bonus report, midweek report, or something along those lines. All right, let's see. Can you get this? Each trade. Again, a lot of these. If you figure out a combo before market, say 165 credit, and market opens higher or lower, do you move your set of strikes to try to achieve the new 165 credit? That's a great question, Gene. So the question is, let's say I'm looking at this overnight, and I'm going to put the volatility back where it is, where it was. Let's say I'm looking at this overnight, and I come up with this trade, and I said, okay, this is what I'm going to go ahead and place this trade. But the next morning, the market opens up higher by 2 points. Will I move the strikes? And the answer is yes. I will absolutely move the strikes. Or I will change my credit because if the market opens up 2 points higher, I will probably be able to get a better credit on this. And if I can get a better credit, that means lower risk to the downside, means lower risk to the upside, and bigger profit potential to the downside, et cetera, et cetera, et cetera. So I will do either or, depending on how much better of a price I can get on the current strikes. But I will move everything up exactly correlating to where the market is. If the ordinary trade don't fit, what do you do with a hedge? So that's a great question. What if I buy this hedge, which I just did, and then the regular trade isn't filled? Well, what normally happens in that situation is I've got the hedge, and so I've got tomorrow, and I'll actually just use that hedge for a trade tomorrow. And so I'm not too worried about it from that standpoint. There is an occasion every now and again where I'll buy the hedge and I'll never get into a trade. It's only happened a couple of times, but you eat it. So you eat $6 is basically, or $4 if you did two of them. Okay, let's see. So somebody saw some decent trades in my scan. No, you didn't. Not option insanity. We're not there yet. I'm going to show you something here. I'm going to add something to. Let me just scroll. Sorry, guys. I told you I use a lot of these screens. All right, so I may add this to this scenario. This will show a few more. It's again a slightly different structure. Let me see if there's any that I would have taken in this one, and the answer is no. All right, so I think we probably found about the best one based on the timing of the market so far. All right, and so that trade never got filled. It expired because I kept it as a day order. I will have the same one tomorrow. Or actually, I'll have a different one probably tomorrow based on new opportunities. So again, I'll create a video for that to add on to this one. Number of opportunities again will increase tomorrow because they'll add half strikes, and the structure of these will slightly change. And you'd be shocked at how much a half strike difference can change the risk reward metrics. It's tremendous. So when looking for a suitable trade chart, what are the parameters looked for? Are these listed somewhere? Maybe a checklist. So suitable parameters are whether you're willing to accept the risks or not. That's the suitable parameters. So is it achieving what you want it to achieve? So you just need to be very careful. And some of these look better than they are from the standpoint of your analysis. Meaning, oh man, I can make $300 to the upside, I can make $300 to the downside, I'm only risking $50 if the market doesn't make a move. But you might be risking $50 within the highest probable range of the market. And so the risk graph looks good because it has these huge profit potential, but a very, very low probability of actually going into those profit wings, if you will. And so you have to take that into consideration. I'm very picky with these trades, and if you look at my, you'll see what I look at and what I consider in the reports, and you'll have a very good idea of whether some of the trades that you're concluding are decent trades match the risk reward metrics that I'm showing in the reports. Okay. Let's see. Just reading through. Some of these are long questions. 2 days. So one of the questions is on sometimes a trade will have a same PPD, current PPD, if the market goes nowhere, with the longs and the shorts. Yes, that is absolutely true. However, what happens is as soon as the market moves, that PPD is skewed tremendously. And so sometimes, because it won't take a very big move either to the downside or the upside in some of these to generate a skewed PPD based on the new market level, then it's fine if the current PPD is the same based on the market going nowhere. So again, I take into consideration both time decay and market movement. And that's what creates the opportunities. Let's see. About how to jump from the chart, I have a shortcut more effective. Guido, do share. Is there something I overlooked? So yeah, I'd definitely be interested in that. Today is Wednesday, and usually my views decrease on average. Yes. So Nuno, the long question, I'll give you the short version of the question, is does the IV decrease for Wednesday going from Friday to Monday? And the answer is yes. So an at the money on general, if the market goes nowhere, drops by 40 points from Friday to Monday. If the market goes nowhere, as soon as the market opens up, the Wednesday options, at the money options, drop by about 40 basis points. All right, so pretty significant. And I'm giving you a rough estimate, average type stuff in normal conditions. And I don't have time for this today, but there are certain days where you want to put on short trades in SPY. So, for example, on Wednesday, Tuesday afternoon, Wednesday morning, you want to be selling Fridays. Thursday afternoon, Friday morning, you want to be selling Mondays. Monday afternoon, Monday afternoon, you want to be selling Wednesdays. Or Monday morning, Monday afternoon, you want to be selling Wednesdays. There's a certain time period where if you sell the calls, you're immediately capturing a significant drop in the IV in those options. Again, I don't want to get into that today. It's not the same. The relationship between the legs is not the same. Let's see here. Do I plan to increase the frequency of sessions? There are 3 more live sessions coming, not live trade sessions, but 3 more Option Insanity lessons that are coming down the road. Okay, again, I'm just scrolling through here. A lot of these I answered. Carter, yes, I did buy 2 extra calls. Thank you. Yep, I did that. You need to buy 2 calls. I bought 2 calls. Oh. I see what y'all are saying. I have a trade size here. What did I do? No, I did. Okay, so the ratio is 1. The trade size over here, if you look at the filled trade, I placed that at 2. That's the trade size for the order is on the right. It's not on the left. I think that's where some of y'all were getting confused. When you say your trade partner free account is not working, what do you do? Gerald, how's it not working? So your free account is not hooked up to an actual trading account. So your free account should only receive the SmartShare files, and you can view them. right? And then you can place them in whatever account you have. So let me know how it's not working. Let's see. I added a credit of 1.05. How did I come up with that? That's just what this one, or excuse me, that's what this one stated. So when I put this together as a credit of 105, when I put it together, I didn't change the prices, but the market moved from the time that I put it together, so we didn't get filled at that. But 105, decent trade, not the best, but I wouldn't get in for any lower credit. So 105 or 110, and I'm pretty certain we'll see that credit go up tomorrow morning, by the way. Let's see. All right, yeah, so market closed at around 292.15-ish. Okay, so if you didn't hear the ding, it's because this wasn't recording the system sound. If you when you get Trade Partner, it'll give you the ding when you're filled. Let's see, how do we get trade alerts? Okay, so again, trade alerts, specific trade alerts, because they come in. I actually don't take trades or don't place orders at night for Option Insanity because the market opens differently, and so I always take them either right after the open or right before the close. That's normally when I do that, and so I don't include trade alerts for that just yet. I will, nor was it included in the package. And then nowhere in that package will you see that trade alerts were included. The trade reports were included. And it's because I'm not doing trade alerts for everybody, but I will start that in October, and you'll get a free month for that. And those will come. Those will not come at night. Those will come during the market orders, during the market hours. And so I don't want to I don't want to add something into a package that most or some traders aren't going to use because they don't have access to turn the system on. Only those who will actually, and you're alerted by email, by the way, when something is sent, you're alerted by email. You could say, okay, yeah, I got an email, I'm going to go turn it on now. All right. Harold, I appreciate that. Thank you very much. Let's see, Ryan, will Trade Partner be available with IB soon as Tradier won't accept? Yeah, IB has been a pain in the rear. But yes, we are working on it, but IB is just a pain in the rear. Steve, I appreciate it. Great, I'm glad it was helpful. Brian, thank you. Glad it was helpful. Great, Patrick. Appreciate it. Man, I got a lot of comments that it was very helpful. Thank you. I appreciate it. I'm glad. So I will definitely do another one for you guys then. Patrick, webinar is good. I managed to take a Monday, Wednesday, last Friday for around 50-cent credit and took a profit of $150. Great, awesome, excellent. What was the reason not to buy the extra 1 point time? Lewis, the reason that I don't like doing it at the same time is because if you add a leg to the trade, it sometimes doesn't get filled. So, for example, on the trade that I talked about that I got involved in this morning, which one was it? It was this one, 112. And let me, there he is. So I took this one, right, this morning, and I got filled at these prices, but then I did not get, not only did I not get filled on the 213, which at those prices would have been a 53-cent credit, but I added a leg in there, which basically was the extra long, and I put it in based on a 1 cent. I should have been filled at 1 cent, but that fourth extra leg and the bigger trade size, I didn't get filled until it hit 45 cents, and it sat there for a couple of hours before it actually got filled. So that's why I like placing my hedge order in first. And sometimes I place on four-legged trades anyway, and so at that point you have to put in the fourth hedge first. Okay, hopefully that helps clarify that. So Christopher, you have the ability to have a free version of Trade Partner. PDS Trader is included, so you can find all the trades. You have access to the trade finders. I'm going to add another strategy in there that'll actually open up a few more opportunities to look at. It doesn't take long to look at these. You know, you go through, you scroll through, you open them up, you scroll through them. It takes literally less than 5 minutes to see if there's one. Then if you see one that's really good, that you're willing to look at, you throw it into a portfolio graph. It takes another 5 minutes. You change the trade sizes a couple of different times. You stress it out a little bit. You increase the volatility, and then you make the decision. Am I going to trade it or am I not going to trade it? Overall, to find a trade literally takes about 10, 15 minutes. And you can do that at night. Again, get a good idea what you want to do if the market doesn't, move away from where you are. And if it does, you can change the strikes. Appreciate that. Can I give more detail for the equal movement ratio? Oh man, Patrick. So guys, I've done so much on options, and some of you guys know this. Some of you have everything that I've ever done on options, and so you've seen my equal movement ratio. I actually talk about my equal movement ratio in a couple of different strategy courses, and I gotta be honest. What I gotta do at this point, I've got one more major option strategy coming out in the next month or so, and I waffle with which one is better, this one or that one, Option Insanity or the one that's coming out. And I've actually done a version of the one that's coming out, and some of you have it. It's called Risk-Free Projection. I've changed it up a little bit because when I originally did it, Monday options weren't on the board. Actually, Monday and Wednesday options weren't on the board when I originally did it. So I changed it up a little bit, and the way that I changed it is just ridiculously phenomenal long term. But again, there's no absolute, but it's a strategy that's best for Friday, Monday. Option Insanity, not great for Friday, Monday. There are some opportunities, but not the best. There's a different approach for Friday, Monday because of the relationship between the two that I play much better. I'll give you a trade that let's see if I can find it. Nope, those are my Option Insanity trades. I told you guys I look at 1,000 different. I'm going to show you a trade that I took today. That's what I'm looking for. Nope, not that one. By the way, here's one for 812. 814 versus 812 that I took. This is the kind that I'm talking about that really provide. This is an insane opportunity, and I made some pretty decent money on this. So anyway, those are the kinds that you'll find that'll start coming up on the board tomorrow. And I apologize. I really want to show you this though. That's my live video. Well, I may not have it open. I thought I had it open. Maybe not. Well, this is what you get for this is what happens when you have 15,000 windows open. I told you guys, PDS Trader is, golly, this is the most oh, here it is. All right, so here's a trade that I took. I'm going to give you this one for free, guys. If you stuck around with me this long, which a lot of you did, well, excellent. Congratulations. So here's my trade. And what you see is correct. My minimum gain there is about $100. It'll go up to around $200, between 150 and 200 to the downside. To the upside, it's unlimited, but it ends tomorrow. If you're familiar with my risk-free projection, it's Option Insanity 2, part 2 almost. So it's basically when you place on a trade and then you just take advantage of market movement after the trade to enhance the trade. Once it's placed, so let me see if I can find one here. This one. Nope. All right, so I'm going to go ahead and change this. These are actual fills. What you see on this screen right here, right now, actual fills. And it started with, so this right here is an exit. And whenever you have a trade, you can say, okay, what happens if I exit this at a profit? All right, so I'm going to get rid of that. And then I'm going to get rid of that. And this is the trade that I started off with. I'm going to go ahead and click that. Hey, it's a bonus. What can I say? I told you I can't help myself. I get rambling on different things. I answered most of the questions on Option Insanity, so it's okay if I do this. I got filled on this trade yesterday, and it's not that great of with regard to what I'm looking at, it's not that great of a beginning trade from an EMR standpoint, but it's the plan of what you do with the trade. So it's got a profit potential of almost $400 to the downside. The risk is about $150 to the upside if I don't do anything. So it's a positive EMR, but it's what you do with it. And so what I do is I say, okay, I'm going to put on this trade and then I'm going to take a profit. It's a 2-3, and I'm going to take a profit. I can't believe I'm giving this to you guys for free. I want to take a profit, and let's say I take a profit at 210. What happens? Well, that is what happens. So now I've got a scenario, and it's actually a little bit better than that. Hang on, because it didn't re-register my profit level. All right, so now I've created what's called a risk-free projection trade. All right, to the downside, I've got a profit of $140 potential. To the upside, it's unlimited. I'm not going to leave it there. What I do is I say, okay, once I take a profit on this in the money call, I'm going to then sell an out of the money call. If the market bounces, I'm going to sell an out of the money call. This is what I was actually filled at, and that's what creates that trade. So I just play the market, and I do all of this through Trade Partners. So once the initial trade is filled, it automatically puts in my sell order to exit one of the shorts at a profit, and then once that's filled, it automatically puts in my third sell order and creates this ridiculous, insane trade. Now, if the market goes up, I do something else to mitigate the risk. But again, that's so. How did I get off on this tangent, Patrick? You so Patrick said, what's equal movement ratio? Here's what I'm going to do. I'm going to put together a package, guys, where I'm going to say, here's what you want to do on Friday to Monday, and here's what you want to do on the Wednesday or the Monday to Wednesday. Here's what you want to do if you need to do a bearish trade. Here's what you want to do if you want to do a bullish trade. Here's what you want to do if you want to do a neutral trade, and put it all together in one package where I cover everything from start to finish in a simple scenario where you can implement a majority or a large number of different strategies fairly simply based on the conditions that exist. You know, here's what you want to do during low volatility. Here's what you want to do during high volatility. And you can just go down the chart and say, okay, it's Friday. What do I want to do on Friday? Here's what I look for on Friday. And I just spell out what you want to look for on Friday. When I get to all of that, obviously I need to explain everything, the context from behind, which includes the EMR. So eventually I'm gonna do that. It'll be the most valuable option from A to Z option course on the face of the planet by far. Let's see. Not a question, just a note. Change your first live trade to 2 Wednesday longs. Let me read the rest of that. Oh, yeah, I already did that. Down a trade partner turned on. If computer shuts down with trade partner turned on, will my exit still be placed? Yes, this is on an outside server. If you're in trade partner and it shuts down and you close the computer, you lose internet, whatnot, and the orders remain. The system remains working. You do not have to have trade partner live and working for the systems to be live and working. They're working on a server that has nothing to do with you or your computer or your internet connection or anything. That's why I love Trade Partner, because I can go on a plane and not worry about what's going on. My orders are being placed, et cetera, et cetera. Looking ahead and playing money management, what is the chance that increasing to more contracts will become a problem with fills and sells? Not anytime soon. I trade on a fairly big scale. You're not going to have an issue with fills, unless the only issue you're going to have with fills is when you put together these three trade size, 4 trade size, and 5 trade size. So you have a 3 trade size leg, a 4 trade size leg, and a 5 trade size leg in one option spread, and you're going to have trouble getting filled on that one. So the simpler you keep it, the better. You're not going to have an issue with trade size once you start using the money management. Is Option Insanity suitable for those like me not in the US time zone? You don't have to make adjustments during the day. Okay, so Option Insanity is not one where I make a lot of adjustments. In fact, I rarely make an adjustment to an Option Insanity trade. You can use that principle, but I don't. When you have, they compare, get back to the first one too. First one, they will look for the credit that was on the one that you liked. Okay, I'll have to take a look at that, Guido. Did you just tell me something about PDS Trader that I did not know? I guess I'll have to look and see. How to compound Option Insanity. So there's going to be a compounding lesson for Option Insanity. It is a little bit different for the first 10 or so trade sites. You're not going to be able to compound efficiently to begin with if you have a small account. If you have about a $20,000, $25,000 account, you can start at a larger trade size, and you can actually, You can compound fairly efficiently if you have a $20,000, $25,000 account. You start with 1 and you go to 2 and go to 3 and you go to 4 and you go just fine. But a $5,000 account, it's going to take you a little bit longer to compound because of the margin issue. That's the only major drawback with that margin issue is you can't compound as efficiently at the beginning, but has no problem whatsoever. If you have about $20,000, $25,000 in your account, you can compound as efficiently as you want. I mean, I'll have a lesson on that in the coming weeks. Joe, yes, those are being sent out, so contact support. And options incentive included in all in the program. Jerry, yes, you have access to it right now. And if you don't, contact support. Any idea when TD Ameritrade will be available? I keep saying soon, and we keep running into issues with TD Ameritrade and IB. So I gotta stop saying. I gotta just stop saying when. We are working on it feverishly. Great, appreciate it. Is Trade Partner only built for PDS Trader? What about connection? Trade Partner right now is only connected to Tradier brokerage. We're working on TD Ameritrade and IB. Gerald, cost for Trade Partner is $47 a month for the live version, or contact support. They'll give you a lifetime for a very reasonable price. Okay, got it. PDS Trader quotes are delayed, John. That is correct. That is so that we're not dinged and a lot of money for the number of subscribers that we have. John, trade size is the trade size guide document for? Yes, that's the money management, the compounding, absolutely. Let's see. In the next video, can I spend more time explaining the exits? Yep, I sure can. Ryan is a great idea. The one about what to do Friday, Monday, different volatility environments. Thank you, Steve. I will get to that. Comprehensive guide would be awesome. Yep, it's a massive undertaking, but you're right, it would, and I will get to it. What tool do I use to determine volatility? PDS Trader, yeah, they're all similar. PDS Trader, any of the brokerage use similar. Can you do SPX? Yes, but the problem, Carter, is in SPX, you run into a situation where you get charged full margin, no matter what. Guido, I will make a video for you. That's pretty embarrassing. Somebody's going to make a video showing me how to use my my program more efficiently. That's good stuff. Let's see, can we? Can we apply the Mission Million? Yes. So the compounding, there will be a specific compounding session for Option Insanity in the coming weeks. Okay. Wow. Account trading vehicle is start with building up an account. Gerald will actually be going through that in the all-in group in, I believe, mid to late October. Okay, delay on the prices is 10 minutes. And with that, it looks like I got all of the questions. Man, I appreciate you guys coming in and participating with the questions. I'm glad to hear from you. Glad it was helpful. We'll definitely be doing another one, and I will do a video of any trade that I take in the morning that's related to what we were talking about today, or in the afternoon tomorrow, and just throw that out there as a bonus as well. And hopefully it will be helpful again. All right, guys, appreciate it, and I will talk to you next time.